I am concerned about the high yield market. I think that's in a major bubble, but I won't say to short it tomorrow. This market keeps going up and up with zero interest rates, and that's what's really pushing it.
Sounds like you're saying this could be the beginning of something problematic.
I think it's not will it happen, it's when it will happen.
There's one investor out there that a lot of CEOs just have to take the phone call from, because when you get a call from this guy, Carl Icahn, he probably wants to shake things up a little bit.
Icahn giving his thoughts on stocks broadly. I believe the market is extremely overheated. Also, if more respected investors had warned about the market in '07, we might have avoided the crisis in '08.
Overall, the U.S. equity market, do you think it's in store for a dramatic pullback?
I've been worried for the last 5-6 months about the market and the economy and in the dangerous spot that we're in. I did speak 4 or 5 times warning about the problems we have. I want to speak out now because I know this may sound corny, but I grew up in the streets of Queens. I love this country, and I feel so strongly about the dysfunction that is going on both in Washington and the boardrooms of corporate America. Over the years, at the risk of being modest, I probably have one of the best records on Wall Street working on broken companies or companies with great potential that just have problems many times in management or what management's doing. And our country is in that position right now.
Congress, currently in a nail-biting three-way tie for least popular branch of government.
And just look at our record. 30 years, no tax reform. 30 years, no immigration. As a result, you have this movement toward a guy like Donald Trump because you want somebody that's not beholden to an establishment. So we need a president that can move Congress. And I think Donald Trump could do it. I disagree with him on certain issues and certainly would talk to him more, but this is what this country needs, somebody to wake it up. One obvious problem the government should have fixed a long time ago is the carried interest tax loophole. People in Wall Street, they're good friends of mine, I like them, but not having to pay full taxes on money that you're earning is an absurdity.
I would take carried interest out, and I would let people that are making hundreds of millions of dollars a year pay some tax, because right now they're paying very little tax, and I think it's outrageous.
Right. You'd like to raise taxes on yourself.
That's
in this
right.
instance.
Teddy Roosevelt was great. He stood up to J.P. Morgan. But where did we get a guy like that again? Donald, of all of them, maybe he's brash, but he's willing to say what he believes, and he's willing to say, hey, this is complete bullshit. The middle-class guy who's making the $50,000 a year realizes I'm being taken advantage of. He can read, he can understand. You know, in Tsarist Russia, they had to have a revolution, and the Tsar would bring out the machine guns and mow them down. All these guys have to do is vote. So we need government to get out of this gridlock, to get out of this dysfunction. A quintessential example is repatriation, which to translate means that there's $2.2 trillion in profits that American companies have earned in Asia, South America, and Europe. Companies that are domiciled in this country, but make goods in another country, produce them and sell them there, nothing to do with the United States. That money is sitting there, and the companies would bring it back. But it is completely, totally unfair, the companies say, and rightly so, that they have to pay a double tax. They make the widgets over there, they sell them over there. Why should they have to pay a double tax where no other country demands that from their companies? Except the United States. Our country is shooting itself in the foot because these companies are saying, well, we're not going to bring it back then. So who are they punishing? They're punishing the little guy again, because if that money came back, it would make for jobs. That money doesn't go into a mattress. That money is given to somebody who then will invest it somewhere else in this country and help to create more jobs, as opposed to taking the money over in Europe and invest it in Ireland or somewhere like that. It's absurd not to make a deal. And these companies are willing to pay a tax, and everybody agrees that it should be done. It's just having a food fight over, it's almost funny if it wasn't so sad, who's going to get the credit for it? You know, is it going to be the Republicans that are going to put their foot down and say, we're not going to charge any tax to take it back. Or the Democrats that want 15% to take that money back. So the whole thing is absurd. And worse than that, through inversions, which I call inversions, meaning a lot of companies are saying, hey, you know what? We're going to get out of this country completely. We don't need to be here. They make most of their equipment. They make the widgets. They make the phones or whatever they do in another country. Why should they be here at all? And the same type of short-term thinking that's happening with the government is happening in corporate America today. The irony of lower interest rates is that companies today, instead of taking the money that they can borrow and really investing in a lot of capital, new machinery, new equipment in their workers to make them more productive, what they do with the money is almost perverse. They just go in and buy another company to show the analysts on Wall Street their earnings are going up, so their stock will go up, and it's financial engineering at its height. The earnings that are being put out today, I think they're very suspect. The guidance you're giving doesn't talk about stock compensation. They ignore restructuring costs. They don't amortize intangible assets. They ignore the cost of taking over another company. We say, oh, there's synergy. And yeah, it's like taking a drug, borrowing money very cheaply, taking over another company. You feel good. It's like steroids. The athlete's jumping pretty high. And so those companies, they can show a huge EBITDA number that we all know is not going to be there in 2-3 years. Look, I know this stuff. I've taken over companies. I understand the way of it. So these earnings are fallacious. And another reason they're fallacious is a lot of companies that are doing buybacks shouldn't be doing it. When you start doing those buybacks, what it does, it's short-term fix, but it weakens the balance sheet. Now, I have been a proponent for buybacks in companies like Apple, where they're sitting with $200 billion in cash and not a lot of debt. They should do buybacks, especially in Apple, where the stock is 9 times earnings. But you have companies today, these are companies I short, selling at 30 times earnings, 28 times earnings, and have no net worth because they keep buying back stock. And yet, analysts look at it quarter to quarter. If your earnings went up for the quarter, your stock goes jumping up. And now, a lot of CEOs who just want to see quarter to quarter earnings up, see the stock up. And yet, if you really do GAAP, which is a tougher metric, you haven't really increased earnings for 3 years. GAAP earnings, they've stayed at about $100 a share now for 3 years, and even GAAP earnings are suspect, which means we're paying a huge multiple. But what is going to happen to that market? Who is going to buy your stocks when those earnings start coming down? And that's with low interest rates, which I think is another scary issue.
The Federal Reserve leaves interest rates unchanged. No rate hike from the Federal Reserve leaves the funds rates unchanged at a range of 0 to 0.25%. It also cites global economic weakness.
Yesterday, the Fed again decided not to raise interest rates. The question is, why should they raise rates? And it's almost a rhetorical question. There's so many reasons they should raise rates. Because low rates are, by almost definition, building bubbles, building real estate bubbles, building bubbles even in the art market. Because the Fed balance sheet has mushroomed from less than $1 trillion to over 4.5 trillion, which is a huge, almost unbelievable move. And all that money crowds out. The little guy, the middle class investor, has nowhere to go with their money but into the market, or even more concerning, high yield bonds that are very risky, and they're being sold en masse to the public just as the mortgage-backed securities. So the companies issue these high yield bonds and buy other companies. And in fact, the M&A business, just doing mergers and acquisitions, has doubled from 4 or 5 years ago up to $2 trillion. The irony of lower interest rates is that, well, you think it's going to help create jobs and make the workers more productive. It's not happening. If you look at our companies today, the growth of productivity is at an all-time low. Property, plant, and equipment is older than it's ever been. So we are not taking care of these companies. We are making earnings with financial engineering, by taking over other companies, by low interest rates. And what I say is, at what price? If low interest rates were just that simple of a panacea, we would never have recessions. We would never have these crises. We would never have these panics. And look, I'm not here to criticize the Fed, because the Fed did save us in 08, but then again, you could argue the Fed got us into it to begin with in 02 and 03 with very low interest rates. I mean, it's like giving somebody medicine, and this medicine is being given and given and given, and we don't know what's going to happen. You don't know how bad the end of this is going to be. You do know, though, that when you did it a few years ago, it caused a catastrophe. It caused 08. Where do you draw the line here?
And I'll just say what I mean. I'm too old not to say what I mean. BlackRock is an extremely dangerous company, okay? And I know, and I mean this, not that Larry's dangerous.
I know I said in my debate with Larry Fink that I think BlackRock is a dangerous company. I don't mean that in a bad way. I don't mean it to insult BlackRock.
BlackRock is there to make money. That's what Larry does a great job at it. Here is the major problem in it, okay? Mrs. Jones calls them, or even an insurance company, or even a pension plan, and say, look, we can't make any income. We need income. So the wealth management guy looks and says, well, you can buy high yield. They don't even know what you mean. High yield, what's that mean? What are the risks? Well, BlackRock got a great name, and we can buy, one of their ETFs. Okay, well, that sounds good. Why not? They don't know the price. They don't understand what the price is. They don't understand what the risk is.
And high yields really stands for junk bonds. People are buying these, not really understanding what they're buying. And if you just look at the numbers, they're amazingly risky. You have $2.2 trillion of junk bonds up 5 years ago, up $1 trillion. I mean, that's a hell of a lot when you think about the whole S&P is only $19 trillion. But Wall Street does what Wall Street does best. It sells securities. I used to laugh with some of these guys that sell these bonds. I used to say, the mafia has a better code of ethics than you guys. You're selling this crap, and you keep selling it. And in fact, you're shorting some of this. And that is really what's going on. And it's just deja vu.
BlackRock is sort of a name on there. And this is one of the problems you had in 07, where you had brand names on a lot of these housing things. And the wealth management guys believe there is liquidity here.
But if and when there is a real problem in the economy, there's going to be a rush for the exits, like in a movie theater, and people want to sell those bonds and think they can sell them, there is no market for them.
We are going to a cliff. You get this party mobile, and they're all on this party, they're all having a drink and having fun. And you know who's pushing that thing? It's Larry Fink and Janet Yellen. Pushing that, and they're pushing the goddamn thing.
I don't think that's fair.
Well, but can I finish my cartoon, and then you can yell at me? Now they're pushing this thing, because fair or not, somebody should have said this in 07. And I'm telling you, in 07 I talk like this, but I never really came out, and we should say it. Every once in a while, Janet wants to put the brakes on it. And Larry says, nah, let it go. And the people in the party are yelling, no, don't touch those brakes. Don't touch, this is fun. And they're moving toward this cliff, see? And this thing is going to go over this cliff. And you know what's going to destroy it? They're going to hit a black rock. That's right. That's what I'm saying.
And I said it laughingly, but I will tell you this. I've seen this before a number of times. I've been around a long time. I saw it 69, 74, 79. I could tell you 87. And then 2000 wasn't pretty. And I think a time is coming that might make some of those times look pretty good. I look back and I love this country, but I sure as hell don't love a lot of the politicians in it or the CEOs. I think they've taken advantage of the system. And it's just deja vu. The public, they got screwed in 08. They're going to get screwed again. I think it was Santayana that said, those who do not learn from history are doomed to repeat it. And I am afraid we're going down that road.